Hey there, Mike Wise, CMG Home Loans with your weekly mortgage update. And a lot of sad news this week that we had to deal with the passing of Charlie Kirk. But in mortgage news, we've kind of had some economic issues that we're looking at here. So the already shaky jobs report, basically it hit a breaking point, and the U.S. economy, they only added 22,000 jobs in the month of August. One of the weakest reports that we've seen in years. And markets, they're now betting on 2, maybe 3 Fed rate cuts before year end. And mortgage rates, they're already reacting to some of these numbers. So they've come down a little bit. On top of that, housing inventory growth is slowing. Prices are softening in some key markets. And buyers, they're starting to see some opportunities that they didn't have a year ago. So let's update you on what it looks like in the market and go to the vibe board and show you some of these updates. So in regards to the jobs report, they only added 22,000 jobs in August. And June was revised down to a negative number, negative 13,000, and that was a big change as well. Unemployment rate went to 4.3%. Again, this is going in the wrong direction here. And you can see the graph here that the monthly jobs gains, they are definitely going in the downward path here. And the BLS, the revision that they had for the last year, so from April to March 31st of last year, almost 1 million jobs that they overstated in the economy. So the year before that was 800 and some odd thousand jobs that they overstated. So a lot of news that's come out, and we've been talking about this over the last year, that the job market is not as good as what they make it out to be. And that came to roost here with those numbers coming out. And so the bond market, the yields have dropped down. And so there's a lot of talk with the Fed dropping the Fed funds rate. In fact, let's go to that real quick here and go to the Fed, what it looks like. So this is next week's meeting. Right now, we're between 4.25% and 4.5% on the Fed funds rate. There's a 92% chance that it's going to go to 4 to 4.25% next month. And then in October, they're talking about going to 3.75%. And in December, they're talking about going to 3.50. So we do see some room for the markets coming back down there on that. So we do see those rate cuts coming in. The mortgage market has seen what's happening, and so the bond market, is the yield is coming down. I'll show you that in just a minute on the board. Rapid inventory growth begins to slow. So the number of home sales nationwide, basically they dropped 0.4%, just a little bit month over month in August to $1.1 million. That's still 11% below the nationwide pre-pandemic levels there. So they've slowed down. Inventory is going up. Inventory is going up. Opportunity for buyers at this point in time. Interest rates, they're starting to change. They're starting to go down. The inventory is going up. It's opportunities for those buyers out there. Sellers are having a little bit of time, longer market time on the market with their properties. So the inventory is picking up, and it's slowed down up there. So inventory is concentrated in a few states. Florida, Texas represent 28% of the total active inventory. So that's where a lot of the inventory is staying. But here in California, I do see in the market right now that a lot of agents have listings that are staying on for a longer period of time. Now, here's California. So inventory levels for the 7 largest states by population. California, 11.9% of the population. Number of active listings nationwide percentage is 7%. And from August of 2025 to August of 2019, so before the pandemic, we're still down 6.2%. So there's still some room to go with more inventory. This may be the new normal that you have to get rid of. And even this week, when we talked about at the broker tour, is a lot of the old school marketing techniques and going back to the basics and door knocking, flyers, mailers, all those things, going out and basically getting out there and doing your job and getting more business the old-fashioned way. So at the end of the day, we do see the bond market, like I said, 92% probability of a 25% rate cut or 25 basis point rate cut next week. Interest rates, 6.3%. That's kind of where we're at. That's a 800 credit score. That's 20% down. That's less than an $800,000 loan. So that's where we are with mortgage rates at this point in time. Let's see here. We're going to go to the bond market this morning, see where we're at. So there's a little bit of profit taking right now, and the mortgage rates, the yield is up a little bit to 4.06. It was down to 3.999, I think, the other day. So yeah, it hit right here yesterday, just below 4%. You can see it's kind of hovering right here in the low fours. 4.06 is where it's at today, right now. So at the end of the day, I don't see the rates moving too much one way or the other at this point in time, unless something crazy happens, which is a possibility. In any event, this is Mike Wise with CMG Home Loans and your weekly mortgage update. I will be around this weekend. If you have any questions, please feel free to reach out to me. Would love to talk to you, and have a great weekend. We'll see you next week.